Hello and welcome to the World Built Environment Forum webinar series. My name is Fabrizio Varriale, and in today's webinar we will be discussing an integrated approach to financing net zero neighbourhoods in the UK. In particular, we're looking to explore how the 3CI initiative aims to integrate local net zero projects into compelling investment opportunities by creating scale and long-term certainty for investors. I'm happy to say we've had over 250 registrations in this webinar from 28 different countries. We have a great trio of panelists with us today. I will let them briefly introduce themselves before we start the discussion. We have Charlotte Clark, Director of Regulations at the Association of British Insurers. Hello, Charlotte.
Hi, Fabrizio. Good morning, everyone. As Fabrizio says, I'm the Director of Regulation at the Association of British Insurers. I suppose for this seminar, what's relevant is I lead on our investment work. So, the insurers are the large pension funds, the Avivas and the Standard Lives, and are very interested in terms of how we can look at the built environment, the investment of the built environment, retrofitting, and those sorts of things. So we've been working very closely with 3CI over the past year or so, looking at options to do that.
Thanks, Charlotte. And we have Steve Turner, who's Director at 3CI. Hello, Steve.
Good morning, everybody. And as Fabrizio says, I'm the Director of 3CI, which stands for the Cities Commission for Climate Investment. We're very much focused on how do we support cities and local government identify the right projects for investment. We don't deal with capital investment, it's all about development finance, and hence we've been working with Charlotte and her colleagues, and also the next speaker, Melanie, Leech, and her members too.
Thanks, Steve. And as you said, we have Melanie Leech, he's the Chief Executive of the British Property Federation. Good morning, Melanie.
Morning, Fabrizio, and good morning, everybody. So the British Property Federation is the membership association for all parts of the UK real estate industry. That's everyone from asset owners, developers, lenders, investors, and then all of the agents, the lawyers, the consultants that support them. So I'm really keen to share some of our experiences with working with our members, and keen to be part of the discussion. So thank you for having me here this morning.
Thanks, Melanie, and thank you all very much for being here today. We prepared a set of questions for you, but I just want to remind the audience that you can send your own questions to our panelists, which really does help to bring the conversation to life. If you're new to these webinars, you should see that you can submit those questions at any time using the question box, which is on your screen. We'll try and pick that as we go through the session. And now I think we can start the discussion with the first question, which is what is actually 3CI's Net Zero Neighbourhoods initiative and why was it launched? Steve, I might ask you first.
Thank you very much, Fabrizio. Well, it feels a long time ago since we started on this journey, actually, 2 or 3 years. 3CI was formally launched at COP26 in Glasgow between Susan Aitken, leader of Glasgow City Council, and Marvin Rees, the then mayor of Bristol. And some of you may have seen him on Newsnight, actually, in the UK last night, talking about the importance, the role that city and local governments play in this space. But we recognise one of the first pieces of work we did was identify the costs for decarbonising the UK's 12 largest cities, including London. And we identified a figure of 208 billion, and that's the report that we launched at the Glasgow COP. But one of the opportunities I think that represents in neighbourhoods and in places is that opportunity to do cross-financing. So by that, I mean there are multiple assets clearly in a neighbourhood around housing, around commercial buildings, around green and blue infrastructure, transport infrastructure. But typically, if you open that up to the market, an investor will pick the most attractive risk-free investment opportunities, which typically are, of course, renewable energy, certainly in the UK. Because they give the greatest and fastest returns and are relatively risk-free, as opposed to perhaps residential retrofit. But by adopting a neighbourhood approach, it was our belief that we could actually start to think about how to develop a model that cross-finances. And by that, I mean taking some of the revenues generated from renewables and using them to help fund some of the more challenging assets, such as residential retrofit. So that report was quite critical for us in terms of identifying a place-based approach. From that, we developed a very detailed outline business case where we worked with Her Majesty's Government and Treasury in particular to develop quite a detailed approach to this. And on the back of that, we started to develop a detailed financial model. That financial model, I won't go into detail on this webinar, but we've been working very closely with a range of organisations to develop, if you like, a repayment mechanism and how that might link. How do you think, where would the investment come from? And critically, how do we engage with households and homeowners in those neighbourhoods? The next thing we've done on the back of the Net Zero Neighbourhoods work, Fabrizio, is we've on the back of that outline business case, we did two pieces of work. One is we went to all of the UK local authorities to ask them if they had potential net zero neighbourhoods in the pipeline that we could work with and engage on. And we got 40 potential schemes, which we launched at last year's COP in Dubai, a UK prospectus for net zero neighbourhoods. We also launched a task force, an investment task force, which again challenged and really helped kick the tyres, if you like, on the net zero neighbourhood model. And that was chaired by Catherine McGuinness, the former de facto leader, really, of the City of London Corporation. And that included representatives such as Charlotte from ABI and UK Finance, some of the major financial institutions across the UK. Some of the recommendations falling out of that were incredibly helpful and challenging in terms of what may be the repayment mechanisms. But now the next piece of work, really, Fabrizio, is to actually get under the skin of some of those 40 neighbourhoods. And that's the next piece of work that we are doing, is helping move some of those forward and working with the investment community on some of those actual individual projects. I think the last thing I would say, that critically, as I go back to that figure of 208 billion, it's clearly way beyond the public purse to fund. And then any net zero transition will have to develop models that would allow private investment to sit alongside public grants as well. Hence, that's the reason for that model.
Thanks, Steve. Melanie or Charlotte, don't know if you'd like to add anything to that, or I will move on to the next question. But no, Charlotte, maybe you were.
No, I suppose I was just going to say, I mean, in terms of, I'm sure colleagues and people who are on the seminar, it's rare that you kind of go to meetings now about housing where you're not talking about retrofitting, where you're not talking about the challenges of net zero. There's lots of ideas out there, but it seems to me in terms of where we're seeing success and where we're seeing actually things move forward, it is where the different partners that are required are working together really well. So, whether that is the local authority and local government, people who have expertise in actually the technologies that are required, people who really understand property, people who really understand investment, that sense of how you're bringing together this, as well as, the challenges of things like workforce. It's such a massive kind of project, a kind of national project to really kind of think about, right, how do we get to net zero? How do we make sure our housing stock gets to net zero? That sense of how you bring together all of the different actors, which is, one of the things that I think 3CI have done really well, of, getting together all those different perspectives. And frequently you're sitting in the meetings and people, the thing that you think is really hard, somebody else thinks is really easy. And that, I think that's one of the really good things, isn't it, about how you kind of bring together people.
Indeed. Might move to the second questions then, which is more broadly speaking, what are the challenges in attracting private capital to achieve local net zero ambitions, and how do you actually create compelling investment opportunities for private investors? Maybe Melanie, you'd like to answer that?
Yeah, thanks, Fabrizio. I mean, I guess it does build on what we've already talked about, and I think the first thing to recognise is how much capital is already going into trying to deliver net zero. I mean, obviously, I'm speaking sort of from a property owner perspective, from a developer perspective. I mean, I don't think, well, I know, and not certainly amongst my members, but across the real estate sector, I mean, there is an absolute focus on net zero, and not diminished by any of the challenges of the last few years in terms of the economic circumstances, COVID, all of those things, have made it pretty tough out there at the moment for the property sector and for development. but the commitment to doing it in a responsible way, and in particular to the focus on reducing carbon impact, is absolutely undiminished, I think, certainly amongst the larger companies. So there is a huge amount of capital already going into trying to decarbonise the built environment. That sort of, that tends, I suppose, to be, you sort of put your own house in order first, as it were. So, it's an individual building approach largely, or where you're developing at scale, the big regeneration projects, it would be trying to think about that project holistically. But there's still sort of a boundary around that. So I suppose the challenge is, how do you move beyond that to, it's almost like a market failure approach. The market, in the sense of people who can take responsibility, have the ability to influence, what they can influence, and the capacity to do it, will and are doing it. But the market failure bit is, what about all the stakeholders and all the challenges that don't have someone who's in that fortunate position? And that's really, I think, what part of what the 3CI work is about. It's part of what we think about in terms of how we harness the capital that's out there, because actually access to capital is not the problem. The problem is harnessing that capital in ways that it can, bearing in mind all of its fiduciary duties and all of its responsibilities, and or managing risk and all of those things. How do you create the vehicles that allow that capital to be unleashed and unlocked? I suppose a couple of other things to say. I mean, investors sort of focus on what you can measure. So actually, I think one of the challenges is actually, how do you get beyond sort of the important metrics of things like EPCs and so on, that are easy to measure, so you can kind of focus on those, and then you can report back and say, yes, we've achieved this and so on. How do you get beyond that to the kind of slightly softer metrics, particularly when you're talking about actually influencing and investing in things that, you can't point to and say, I own that, or I take full responsibility for that? It's much messier when you start to think about
Oops, Melanie, we can't hear you at the moment.
that allow that capital to come in and invest.
Sorry, Melanie, we couldn't hear you maybe the last 10 seconds.
Sorry about that. I was just saying, I think the real challenge is, how do you create the platforms? I think the capital wants to invest, and the capital is there. It's how do you create the platforms that allow that capital to be deployed in a way which allows the capital investors to meet their own fiduciary obligations and their own objectives, and be able to report back and showcase that. I think that's the real challenge, and that's something that the 3CI projects have been all about, and something that we worry about a lot as a big part of the challenge, but also a big part potentially of the solution. So I think that's the key to all of this.
Thanks, Melanie. Charlotte or Steve, maybe you'd want to add something?
Yeah, no, just to kind of add to Melanie's remarks, I suppose, speaking from the investor side, I think absolutely what Melanie says is exactly the challenge that we face. So it's not a question that there isn't money there. If you look at something like the UK's pension system, you're talking about trillions of pounds are within there. It is how you can access that to be able to invest in these sorts of things. So at the moment, a lot of those investments will be going into things like government bonds. There might be some equity in there, but there will be some investment into direct housing. But looking at retrofitting is slightly new. And so what's the key thing? I mean, I'm going to hope that everybody on the seminar has a pension. So in terms of what they would want their pension invested in, I'm going to guess they probably don't want it invested in a kind of roulette kind of, well, we've got a 1 in 10 chance of this actually kind of paying back. What we look for in investments are very long term. We're investing over 20, 30, 40, 50 years. So almost the longer the better for us. And what we look for are steady returns. So we like stability, we like security, we like certainty. Just because that's, if you think about how we pay out pensions, we pay them out in a very stable, secure kind of way. So, that we're trying to match our investments to those sorts of liabilities. So when you think about something like net zero, where the challenge is, as I say, we don't like uncertainty. So, we're looking at kind of, where do you get certain income streams? So with something like retrofitting, do you try and put a charge on the neighborhood? Do you try and put a charge on people's kind of energy bills, because their energy bills will be lower? What's the way in which you get the payback, and how can you make it as certain as possible? Because by making it as certain as possible, you can make it as cheap as possible. And I think that's the thing. When we talk about we like low risk, people are like, oh, well, you should take more risk. But investment, basically, if you take more risk, you will need more return. So in order to be able to do this as cheaply as possible, it's a question, and this is why it's so important to work in partnership, because government can take certain risks on its balance sheet that private sector kind of pension type firms would find very difficult to. They find it very difficult to because the regulations wouldn't allow them to, but they would find it very difficult because they would need a return that maybe made the project less economical if you were having to pay a kind of private return to it. And I think it was Steve at the beginning, you look at the numbers that are required to do these kind of these projects to move the housing stock to net zero. You're talking about hundreds of billions of pounds. Probably across the whole of the UK housing stock, you're probably talking about trillions of pounds. That is very difficult to have one finance source from. So how do you bring together different finance sources? How do you bring together private development fund money with the institutional investor money with kind of government money to be able to kind of manage the risk well, and to be able to kind of design these projects in a way which is as economic as possible and therefore as cheap as possible, because ultimately all investment has to be paid back. So trying to do it in a clever, kind of thoughtful way will be the right thing for the end consumer. And hopefully they will also end up with better housing as well. Thanks,
Charlotte.
If I could add, Fabrizio,
sure.
In a challenge, I think what Charlotte and Melanie clearly articulated is a very, very complex and challenging issue in terms of how do you align public and private investment together to get the returns on investment, but also generate that importance of place, which perhaps comes back to the challenge that we have in the public sector. And I mean that in its broader terms, that the skills and capacities to develop these investment models and these investment cases in places are really challenging. And they don't lie now, I don't think, particularly in local government, really. They lie within the private sector, and accessing those skills and capabilities is not cheap. Marvin Rees, again, I'll quote him, the work that Bristol did on Bristol City Leap, incredibly great programme. It took 9 years and £6 million of investment. And Marvin is on record as saying, that Bristol were, in his last year as mayor, would never have the resource to go and do that again. And I think you speak to many cities in the UK, they're in a similar situation. How do you therefore attract those skills and capabilities in the private sector to develop investable propositions in partnership that doesn't fall foul of local government procurement rules? Because there's another element here, is that if you have some of Charlotte's members wanting to invest upstream in some of the development costs, what's to say that when you get to procurement, they don't get selected to deliver the programme of work? And there's a real risk here of how is risk and reward shared equitably in the development of these projects between both private and public sector.
Thanks, Steve. We got a couple of comments from the audience, which I'll pick up. I see that Mike has commented that there is the Investor Confidence Project Europe, which is an Horizon project by, so it is co-financed essentially by the European Union, and it's aiming at unlocking access to financing for the building renovation market, just something to be aware and something maybe to look at. Obviously, something that's happening elsewhere from the UK. There was also a question from Paul, maybe a bit slightly off the track, or more of a political question, where they're asking, can we not implement tax on any organization that create large profits or investment cash for them to be invested into net zero? And we probably can, but I'm not sure that anybody will or everybody will agree on that. I don't know if any of you has something to say on this.
Fabrizio, I'd make a comment on that, which is not to answer it directly, and so that's a good thing or a bad thing. But what I think that potentially does do is miss the point that, you know, we need the right narrative around delivering net zero. And I think thinking of it as a kind of punitive thing where you tax people who look like they're doing well in order to raise money, which is then sort of allocated, somewhere else by someone else, is not really the spirit in which we will harness everybody, from us as all as individuals through to those large corporations, to work collaboratively to solve difficult challenges. So that would be my answer to that question.
Yeah, I would link those two comments together as well. So at the moment, where perhaps the UK is a little bit behind some other kind of jurisdictions in terms of thinking about these sorts of models. If you think about what's happened in the US over the last few years with the Inflation Reduction Act and where it has gone with its incentives towards investment and how that has driven growth. Almost all of these institutional investors are international. Some of them are UK based, but it is an international kind of competition to attract this money and to give the right returns. The tax environment is one of the things that you can do to make it more attractive or less attractive. None of these things can be done without kind of thinking about the consequences, whether they're intended or unintended.
I think so. We could add as well. I think we're in the UK. We're in a process this week when the main political parties are releasing their manifestos, and all have a slightly different take in terms of the tax system on this. But I think my point is that we should stop seeing this as a cost and see it as an investment. Certainly in the city that I live in, Greater Manchester, 80% of the public sector budget is spent on 5% of households. So that's a significant investment in those households, and there's those investment in the households is not just about the physical fabric of that building. It's about the social and the health care that is required for those households. And we need to start thinking about, if we are, for example, the role that retrofitting some of these unfit properties, frankly, are really not fit for purpose. What might that do in terms of improving the health of those who live in that household, and therefore the release on the social and health budgets that we are having to invest otherwise in those households and those individuals. So seeing that as an investment would release other monies and other budgets to do other things, which the economy is clearly crying out for.
Thanks, Steve. I can see this is definitely a topic that's stirring some interest in the audience. We got another question from Gideon, and they're asking, talking of scale of investment required, scale of partnering required, the type of vehicle required to hold partners together. They're all significant. They say, might they suggest a generational change in how local authorities need to be funded and how they bend finance to a neighborhood approach? Also without reducing the primary role, supporting the wider community needs as they're ready. So do you think that needs to be changes in the way local authorities are funded? I appreciate this might be also a kind of slightly off track question.
Well, go, Charlotte, you go, I'll go after you.
I was going to say, I'm no expert with regards to local authority funding, but what I have seen is, it seems to me to be clear, and I think we've all raised the point that in some local authorities, in some combined authorities, they have the ability and the skills to be able to kind of attract investment and private investment in some areas they simply don't. And I think that there needs to be some careful thinking about, in a local authority where, when you speak to people in local authorities, they're constantly dealing with a crisis, whether it is social care, or where things are with housing. They are really at the sharp end, and obviously really kind of challenged with regards to budgets. If the UK plan is for them to be able to kind of work with private sector investors to bring in things, to have more capability to look at some of these big investment opportunities, that has to be funded in a way which allows them to build up that resource. I see it in some places, particularly I think within the city. So if you think about Greater Manchester, if you think about the West Midlands, they have that capability because the devolution deals are probably a little bit more generous than they are in other areas. We're talking about cities at the moment. When you start to move outside of the combined authorities, I was talking to colleagues up in Cumbria who are looking at how they can kind of do this. There's got to be some sort of kind of seed funding in order to kind of build that sort of kind of capability. As Steve says, if you go to the private sector, people will charge you to be able to kind of do these things, and they will want returns on it. And the idea that local authorities don't have this capability, you meet great people in local authorities who are trying to kind of build it, but it does feel that this is something that perhaps has kind of been lost as local authorities have dealt with cuts over the last few decades.
Yeah, I agree with all of that. Just maybe a couple of things to add. I mean, I think, and go back to a point you made earlier, Charlotte, about investors wanting certainty and stability. So, what local authorities can and need to bring to the party is that sort of security for investors, that there's a partner there that is in it with a clear vision and that leadership. Then that doesn't cost a lot, but it does mean you have to have the capability to be able to develop and understand that vision, and the capability actually just to work in a sophisticated way with the private sector, and the trust to do that. And all those things take time to build. So I agree with that. I mean, there is no world, I don't think, in which local authorities are going to be resourced and funded to deliver net zero in their areas. So it very broadly in my head, I think you've got the private sector providing the investment, and the local authority, its role is to deliver services. So the capital and the investment has to come from the private sector, but the local authority has to be able to play its part in unlocking that by providing that vision and that security to the long-term investors that want to come in and partner.
Thanks, Melanie. I'm aware there was another question from Tatiana, and I think this is quite off track, but I wouldn't like to just let it undress. And they're asking, what mechanism can the government use to check if organizations are on track with their framework plans towards achieving net zero by 2050? Well, first I would say not even the government plans are on track to achieve net zero by 2050, so I'm not sure they're able to tell organizations what to do. I might answer that saying that already at the asset level, so at the individual building level, we are working on a UK net zero carbon building standard. So that might be one of the ways that can be done. At an organizational level, there are other ways that there's the Science-Based Targets Initiative. So there's a number of things. I don't know if maybe you want to add something that particularly looking at organizations rather than at the asset level.
Means so in financial services, transition plans, the regulations that require financial institutions to show how they're getting to net zero coming later this year. So there has been a task force that's looked at, because as you say, it's quite difficult in terms of what is your transition plan as an organization, what's your investment strategy, what's your footprint strategy. Sometimes a lot of these organizations are quite large organizations, have a lot of buildings themselves, how they are transitioning to net zero. But those requirements come in later this year for financial services. Excuse me, almost every financial services organization would be affected and would have to start kind of providing these sorts of plans so you can show where your investments are. Are your investments putting you on track to be able to have a portfolio that gets you to net zero? So yeah, I mean, I assume there are requirements on other sectors, not just financial services, that will require reporting to be able to show what your plan is to get there. But I think your point is a really good one. I think one of the things we've been pushing is, without a UK kind of transition plan, so without knowing what proportion is coming from nuclear, what proportion is coming from wind, it's quite difficult to know, well, where am I going to be investing? Similarly, what is the plan in terms of retrofitting? Because the government, whether that's through local government or through central government, will have to be a part of that. So without that kind of clarity about what is the UK transition plan, it's a little bit difficult, I think, to kind of design your own. But one of the things that always surprised me, well, I haven't worked in the insurance sector for very long, but if you've worked in the insurance sector for the last 30, 40 years, you've basically spent the whole of your career watching flood change, watching the amount of storms change, watching the cost of climate increase, and how that feeds into people's premiums and what they have to pay. So it's very, very much in the DNA of us as an industry in terms of wanting to move to net zero, whether that is through, ensuring kind of greater transition, greater resilience, but also in terms of how we invest is one of the key things for us, and one of the things that, around our board table, that is almost the #1 topic.
Just to add, Fabrizio, I think you were spot on with your comment to Tatiana's question around what do you know. The judiciary have made a decision that the government's plans for achieving net zero aren't sufficient, and they will need to revisit those plans. I think part of that revisiting must be, for any new government, a proper strategic compact relationship with local government. There's no way national government will deliver on its net zero ambitions without local government, and equally the other way around, of course. And that's not even mentioning the private sector, commercial developers and finance too. So I think the next government in the UK does have to recognise that to achieve or to capture, arguably, the dividends that are on offer in terms of jobs growth, improved health, that net zero does provide and offer, will require a new strategic relationship between local and national government, which currently, really, if we're honest, doesn't exist.
Thanks, Steve. I might then move on to the questions that was on the screen now, which is asking how can net zero housing challenges, so particularly looking at housing, be addressed, particularly on achieving scale in a market with such a varied variety of housing tenures. Maybe Steve, you want to come on that?
Yeah, I'm very happy to start. I mean, I think this is the real big challenge one, isn't it? Really, in terms of place, in terms of getting that investment, and partly the challenge is it's the housing market, as we all know, is very fragmented. On the one hand, you've got social housing, and where you've got a number of registered landlords with thousands of properties, and on the other hand, you've got private households where it's individual properties. And I think various schemes attempting to deliver on the latter have been really challenging, because it's down to individual householders actually, A, the ability to pay, and B, the willingness and wanting to do it. And for various reasons, it's those initiatives have struggled to get off the ground. So I think our view, at 3CI, is let's start with go with the grain where it's easiest. And I think working with the social housing sector, you are there having a large number of properties which presents scale, which is, of course, is much more attractive to Charlotte's members, for example, because you get the risks are reduced, you get greater returns on investment, all the points that Charlotte's made very eloquently earlier. So I think there's that bit about beginning with the social housing sector. It's not as straightforward, of course it isn't. And then we move on to sort of the challenge in the private sector and the ability to pay. So actually, the retrofit, achieving net zero in a property, a terrace property in South London, South East London, and perhaps in parts of Manchester, is actually not hugely different. But the ability for that private householder to make that transition is different. Just simply that the income that they have at their disposal. So we do have a challenge, across the country around that just transition piece. The costs of retrofit are pretty similar, if I'm honest, across the UK, but the ability to pay for that transition by private householders is far more difficult.
Thanks, Steve. Maybe Charlotte and Melanie, you want to add something?
I mean, I think the biggest challenge is privately owned homes that already exist. There is so much happening around that huge challenge. Whether I think about sort of, in the build to rent sector or the purpose-built student accommodation sector or some of those big regen schemes, take a Canada Water, for example, that new build, there is lots of stuff out there. Actually, particularly, investors not only, maybe sort of overlap with Charlotte's members again, but also pension funds and so on, not only investing in their own future developments and really strong commitments to net zero around those, to investing actually in solutions providers. I think that's been quite interesting. You can only deliver it in your own schemes if you've got the right partners to work with who can create the solutions for you. So someone like Legal & General, for example, investing heavily in solutions providers, as well as investing in making sure and having very strong commitments around the homes that they build will be net zero. And of course, they're also they've got a for-profit registered provider in social housing too. So that's a sort of multi-tenure approach, but goes beyond just the homes themselves, which I think it's got to be a key part of it. There's this huge challenge around, have we got the skills, have we got the capability to deliver the solutions, even if the commitment is there to start with. So I suppose that the new build part is relatively, and I use the term advisedly, none of this is easy, but is relatively straightforward. And where you've got big regen schemes which sort of will blend a mix of new development and existing buildings, there are opportunities there to make it very easy for the existing homeowners and the existing buildings within those schemes to be part of the solution. So come back to Canada Water again, they've got visions for, and they will deliver sort of solutions that allow heat sharing between offices and homes. Well, the homes that are already there will benefit from that, just as the new homes that they build. So but I think in the middle there is this huge challenge about privately owned retrofit, and as Steve said, the challenges around that are very differential across the country, let alone the starting point that a homeowner has to be incentivized in some way, or it made so easy for them to do it that it becomes a natural and obvious choice.
Thanks, Melanie. I'll move on then to the next question, which is not looking at housing, is rather looking at other asset classes. And so we're asking, what are the challenges in this case for public space investment and other asset classes, and how we might overcome them? Maybe Steve, you'd like to answer that?
Yeah, I mean, again, happy to start. So I think we all live in places, don't we? We all live in neighbourhoods, and we live and we play and we work in them. So we all recognise what makes up a place, and there's a number of different assets. There are residential, as we talked a lot about. There's the commercial side. There's transport infrastructure, how we move around those neighbourhoods and get to other places. There's green and blue infrastructure. There's circular economy issues, waste. So we all know these places, and we want, when we live in them and when we work, we want to make them better and more attractive for people to want to live there and for businesses to locate. The challenge with these places is around if you like, the operation and management of those assets. It's very, very fragmented. Some of it's in private ownership, some of it's in public ownership, both, and the operational aspects too. Which comes to for me in place is a governance challenge, and making partnerships work in those places so everyone is broadly around the same primary objective. And quite often you say, well, who leads that? And it's quite often the finger does sort of end up with local government, whether that is right or wrong. They don't necessarily have responsibility for those assets, but I think they are the best placed in this regard to curate that program of work to create net zero neighbourhoods. not least because they are democratically accountable bodies, at least the political side of this, and are answerable to the communities which live in those neighbourhoods. So I think the main challenge I think we face is, yes, there are financing challenges, yes, of course there are technical challenges, but there's also critically a governance challenge, which I think quite often gets overlooked. And yeah, you know, there are parts of the UK which are brilliant at partnerships, bringing both private and public sector together, and have done for, you know, decades actually. If I think back through my career, some brilliant examples of partnership working, and perhaps, you know, we could sometimes revisit some of those really good examples rather than reinventing the wheel. But yeah, I think governance is a major challenge for all of us. And I come back just to the point that, you know, I made earlier about that, why that is important. Partly is that, you know, to Charlotte's members, you know, this is about a logic of capital, and for investment to flow, it needs to be relatively risk-free. Otherwise, they will rightly be asking for higher returns. So having governance structures that work are really critically important. And it's that investment that makes places important. And that is what is that importance? It's about places where people want to live and I feel safe and happy, and businesses also want to locate.
Thanks, Steve. Maybe Charlotte or Melanie, you'd like to add in?
Yeah, no, I mean, as well as working with 3CI, I mean, we work with a number of other organisations that are looking at kind of other aspects of, you know, what are the other parts of net zero? So it isn't, you know, of course there's housing, but, and it's such a crucial part of it, but it's about that broader infrastructure, isn't it? So we've been working on projects to come up with how do you get a better EV charging grid. You know, so working with local authorities to ensure that actually capital is flowing into that sector. So, I mean, there needs to be a plan. How do you ensure that in areas, you know, we all need a UK-wide EV charging grid? You know, we don't want to turn up in a local authority that hasn't got a plan, or where it's less economic. You know, that there has to be some coherence in terms of how this works, so that people have confidence in terms of moving towards electric vehicles. You know, that's one of the other areas that we've been looking at. And it's a very, very similar approach. I mean, I think on the finance side, you know, I always kind of describe it as nothing new. And if you're coming up with something new, you're probably doing it wrong. You know, that you're just looking at how you blend different bits of finance. If you try and get clever with finance, you know, we will all have our favorite example of when somebody's decided to do something clever. You know, it's about how, you know, how do you give money, and how do you get a reasonable return for the risk that you've taken with that money. You know, we've been working, as I say, we've been working on EV grids. We've been working on things like generation. So how do you get generation within areas? People think about either the big nuclear kind of things or offshore wind, but, you know, increasingly a lot of that generation will happen more locally. You know, so where do, you know, things like solar grids, how does tidal work, you know, those sorts of kind of areas, and thinking about, well, what are the local plans with regards to generation, as well as what are the local plans with regards to networks. You know, ensuring that you've got the right networks for kind of energy is going to be, it seems to be one of the really crucial things of how, you know, making sure that local plans fit into national plans with regards to how the national grid is upgraded and worked. You know, the stats about how much electricity we require as we move away from fossil fuels, you know, quite frightening, really, in terms of just what is required in order to make sure that all of our needs can be met kind of going forward as we kind of move towards the electrification of the economy.
Indeed.
Maybe just to build on that, Fabrizio, if I may, and talk about an opportunity for a particular asset class rather than a challenge necessarily. Well, it's a challenge because they can't harness the opportunity. And I'm thinking of our sort of logistics, warehousing, distribution asset class in property. You know, where we have a massive opportunity. You know, they have big buildings with big roofs. You know, and you know, look to, you know, sort of other parts of the world. You know, there are places where there are sort of, you know, I think Basel being one example, no roof unused. We absolutely should have that same approach, but actually, it's not. There's no incentive at the moment to harness that capability fully. Not only because you can't get a connection back to the grid. That capability could be delivering back to the grid a significant proportion of those future energy needs. But if you can't get a connection to the grid to export that energy, and when you do, actually the financial return on it is tiny, so the cost between the sale price back to the grid and the price on the grid is so vast that it's not financially an incentive for people to do that. So there's a massive opportunity there. But so the role that national government needs to play is absolutely to focus on investment in the grid, not only so that we can decarbonise the grid directly, but also so that we can create the ability for other people to help with that, and to help in particular with that increase in capacity that we're going to need. So it's an opportunity as well as a challenge, I'd say.
Indeed, as well. I saw there's a couple of interesting questions from the audience, so I will go to those first. Federica is asking, what type of evidence would private investors be looking for before putting money on the table regarding the returns from net zero neighborhood type decarbonization projects investment? And so what are the main problems in this topic? Sure.
So it's a really great question. A lot of the pilots that we've been working with Steve and others to kind of design are kind of testing this, about, right, well, how do you get the certainty of return? As I say, if you can get certainty of return, you can do things cheaper, which is obviously quite key. There are also regulatory rules, our regulations don't generally allow us to just invest and kind of hope to get a return. We're talking about a lot of these investments are debt investments rather than, say, equity investments. I mean, there are pension investments which are equity, but a lot of the things that we're talking about are debt. So it's what is the repayment mechanism and how secure is it? And obviously, if you're working with local government, you have that degree of certainty. We've also been working with organisations like the UK Investment Bank about whether or not, let's say, some extreme risk. So a good one is on the EV charging grid. There is a minuscule risk, a small risk, that we could all kind of invest in EV charging and someone invests a hydrogen car. And then all of the investment that we have just put into EV charging suddenly becomes redundant. That's a very difficult risk for someone to take on their balance sheet. It's quite an easy one for kind of institutions like UKIB to take on their balance sheet, because people don't think it's very, very likely to happen. So in some ways, you're providing this guarantee for something that you think is very unlikely to happen. But this is why the design of the financing of these things, the understanding of the risks, is what's kind of key. And I think we will learn, as we're doing pilots and we're looking at retrofitting and we're seeing what happens to electricity bills, what happens to energy bills more generally, how efficient are these homes, what are the costs, certain costs are going up quite a lot, but that sense of, right, do we have a stable model now that we can kind of roll out? I think we're still in that stage where we're all trying to learn. And as institutional investors, we're kind of willing to take a little bit more risk in these sorts of things. We kind of know, if it's a pilot by definition, you're learning and you have a degree of uncertainty, which is kind of important why you do these pilots, to be able to learn before you look at really what is the big model for rollout. Do you have different ones at different areas? Do you have different ones for different different parts of the property portfolio? It's unlikely that we'd have a single kind of retrofitting model for social housing as we would for private and owner-occupied. So, it's how do you work these things out? How do you build the evidence base? And in building the evidence base and bringing that certainty in for institutional investors. So at the moment, I wouldn't say it was particularly high in terms of what's the certainty, but we've got to work together to be able to kind of bring that in so that we can reduce the cost.
If I could add very briefly, actually, to that point that Charles just made, is that it's return on investment not just to the private investors here, and this is why it's really critical to think about blended models. So if again I've used the example of retrofit of housing, there's going to be a return to that investment made back to the private investor. But also let's again think about the costs currently in some of our communities of the tax burden, and it is a burden on the state in terms of health provision and social care provision in poor energy efficient households. If that investment in private household enables that to be upgraded, you then decrease that tax burden because the people are going back into work. But that allows also for public agencies to sit alongside the private investors to make their investment, and that then helps de-risk the total investment, particularly from a private investor. So it's about thinking through those things as well in terms of the question. It's not just about return to the private investor. It's a wider piece which needs to be looked at, I think, in that regard.
Thanks, Steve. There was actually the other question that was very quick from John, who's asking, is there a reasonable return for retrofit from Charlotte viewpoint? So I'm not sure if John is asking for a specific figure, or maybe a more precise description of what there might be.
I think I was still on mute. Sorry. I don't think there's a specific figure, but I mean, if we're not talking about. We're talking about probably base plus 50 basis points, 100 basis points would be quite racy for us. So if you think about where the interest rate is, it's something above the interest rate. So we want to get something more than we would get for kind of government debt, just holding a bond, because we're taking a bit more risk, but not such that it would be not looking at kind of equity returns or what would be the average equity returns over a period of time. So we have a kind of idea in our head about what we think would be a kind of reasonable return. Again, it's about kind of building the models that kind of would allow that to happen.
Thanks, Charlotte. There was maybe a follow-up question from Paul, I can see, who's asking that he agrees with problems concerning risk, but surely saying we have enough experience to establish certainty within housing models for energy and efficiency. Myself, as an energy modeler, I might say, well, it's never sure. It's an energy model and not reality. Reality is much more complex, and you can't predict necessarily how a house will perform. Certainly, we could do better than EPCs, as we all know. But I don't know if you'd like to comment on this particular aspect. If it's relevant also to this.
Yeah, I mean, it's very big. One of the ways to reduce that risk, arguably, and there's a number, is about scale. So dealing with individual properties, it's hugely risky for an investor. I mean, but the net zero neighbourhood model is based around a proxy area of 1,000 properties. So for an investor, in terms of long-term patient capital, that's much more palatable in terms of providing that long-term investment, because you're dealing with 1,000 properties as opposed to individual ones in an area, which it starts to mitigate some of those risks.
Makes a lot of sense. I might, we were actually almost at the end of the hour, so I might go to the next question, which is asking what regional similarities and differences are we seeing in addressing this net zero challenges across the UK, but also if you have any other experience beyond the UK.
I think it's really important that each neighbourhood in each region kind of does the thing that works for them. When you go to different cities and you go to different places, I think one of the challenges, and perhaps one of the biggest risks here, is about individuals and how they react and respond to these things. And as an institutional investor, that's not my area of expertise. Understanding the communities, understanding what would work for them, understanding how they feel about the benefits they want to get, is one of the things that I think is really the local area, and that not just the local authority, but even kind of further down, are bringing to the design of these projects, because that engagement and people feeling that this is a benefit for them, this is something that they want to happen within their neighbourhood, and it's not something that is being done to them, I think is really, really crucial in terms of making it work.
I think that's absolutely right. I mean, it has to be locally based, because I think you have to start from an asset-based approach, which is, what are, not, yes, what are our challenges, but the end point is the same, i.e. getting to net zero, but where you start from is completely different. If you're in the northeast, and you've got access to fantastic wind power from the coast, and et cetera, or if you're in the city centre, right in the heart of the middle of the country, the assets you've got to work with and where you start from is going to be totally different, let alone then the demographic of your population, the profile of home ownership, or your industrial base. The context is going to be so different that you have to start. But I think you have to start with, where do we want to get to? Okay, we understand that, but actually, where do we start from, and what have we got that can help us with this challenge? And I think that's why you see, but I think it has to deal with the scale point. That has to read where it's probably furthest advanced and working best in terms of models, is where you've got significant strategic leadership from the public sector at a regional or at a scale level. And I think the opportunity, I suppose, of post-election is that certainly Labour have been very articulate around this, but I think all parties are committed to the devolution. I don't think you can put the devolution genie back in the bottle. I think it's only going in one way, and we're seeing more elected mayors, more attempts to build the kind of scale that allows to answer all of these challenges, whether it's economic growth, whether it's improving people's lives, whether it's delivering net zero. That scale is the way to harness private capital. Scale proposition.
It's a really interesting point, isn't it? Following up on what Melanie said, I mean, I think this sort of devolution is great, and I think we're sort of general advocates for that, because that enhances the powers that have at a regional level. Although I guess many of those chief executives would return and say, well, the powers are fine, but we need the money to deliver those powers, etc. But what's quite interesting, I think, on the back of that is there the will, the political appetite, and arguably the political risk locally to do some of this stuff, because it does take political risk. And where there's a significant mandate from the electorate locally to do it, then politicians are much more inclined to have a go. A really great example is the work in ULEZ in London, and the whole issues around there, and the current mayor of London really actually saying, I'm going to extend and expand the ULEZ programme. Now, that was politically risky, really politically risky to do, but it carried through very strongly, in fact. And it's quite interesting how, that sort of piece around devolution is fine, but it still requires local politicians to take that risk and to articulate that to the electorate. That's democracy, isn't it? But it is, one of these elements in terms of, I think, the differences and similarities we may be seeing going forward, and whether elected officials are and will continue to take that risk the other side of the general election. I think they will.
Yeah, that point about the narrative is incredibly important. I mean, Steve, you and I, we've discussed this many times. You're absolutely right. What's the narrative that allows a politician to sell a difficult decision to the people they're accountable to? I think this is, whether it's at national level, whether it's at very local level, whether it's, I think this is so key to all of it, which is why I talked about reputation and those challenges earlier on in the conversation.
Thanks, Melanie. I think we're actually arriving at the end of our time, so I'd like to thank you very much, Steve, Charlotte, and Melanie. But before we close, I'd like to remind the audience that we will publish a recording and a written summary of this webinar online and please feel free to share those with your professional network. Also, please take a few moments to let us know what you thought of today's webinar by completing your line poll, which will appear on your screens at the end of the session. You should also be able to see in a moment a preview of the upcoming WBEF webinars. If you require any further information, you can search rscs.org/WBEF or just search World Built Environment Forum on LinkedIn. Now, it was really an interesting discussion, so thank you very much for attending this webinar, and thanks again very much to our panelists, Charlotte, Melanie, and Steve, for sharing their view with us. Until next time, then goodbye.